And joining us now from San Francisco, we have Kirk Hartman, Chief Investment Officer at Wells Capital Management, and Kirk's helped oversee about $350 billion in assets. Kirk, I won't ask you if you enjoy the ribs meals at Burger King, but let's talk about the markets. Here we have another tumble, disappointing existing home sales figures. How concerned are you about the housing market right now in the U.S.?
Well, as you know, the housing market has been very weak and continues to be. So I'm not that alarmed by the number. We had the tax credit of $8,500. I think if absent that tax credit, I think the market would have been poor. So I think some of the numbers for the last 6 months of the year have been inflated by that tax credit. So I would argue it's just more of the same.
Okay, what about the markets then, Kirk? Because we spoke at the beginning of June, and you said maybe this is a buying opportunity. What about now, considering a lot of people see the second half pretty much the same as the first half, which is pretty much going nowhere?
Well, I think the volatility will continue. I think there are going to be some great buying opportunities this fall. I will suspect that we will have a couple bad days in the fall. I think you'll see the markets go off on the downside a couple days. I think you'll see the professional buyers come in and buy, and I think that those are great opportunities.
Okay, when you say there's going to be some enormous buying opportunities in the fall, how do you know? How can you gauge if it's a good day to get into the markets?
Well, you can just look at relative value. I've never seen the UK and Japan and now the United States where dividend yields on a great company, we probably own this company like an IBM at a 2%, and you've got interest rates at 1%. So, you're in an environment where you can actually get more in dividend yield than you can in the bond market. And if you think about the bond market, there's so much more downside than there is upside. So just in terms of just relative value, I think there's some great opportunities out there.
Okay, even though there is more downside, people are still flocking to Treasuries these days. Would you advise people to be running and hurrying into this investment, or are the gains already priced in?
Well, short term, I think you're going to do very well in bonds. What I worry about is longer term. The monetary history of countries printing money, as the United States is doing, and not having inflation down the road is very poor. I think a lot of people are going to learn at some point about, the two bond terms, duration and convexity. Rates are going to go up a lot at some point, and maybe a ways down the road. But at that point, you could see bond portfolios get hit pretty hard. So my advice, especially to retail customers, is stay on the sidelines, stay in cash, wait for buying opportunities. And again, I think there'll be a couple great buying opportunities early in the fall. I think that's the time you go in, and I think over time you're going to do very well.
Okay, Kirk, always a pleasure. Thanks for that. Kirk Hartman of Wells Capital Management.